What's going on, everybody? Welcome back to the More We Know podcast. I'm your host, Mir, and the goal of the More We Know podcast is to provide you mentorship in your pocket. So within an hour or less, you can get real mentorship from experts all around the world. Today on the podcast, we have Tom Burns, who is the author of the book, Why Doctors Don't Get Rich, How You Can Create Freedom with Passive Income Investing. It's a book that I read, I've shared with my family, phenomenal book, and you can find that book on Amazon. Tom Burns has a phenomenal story. You'll hear all about it in this podcast shortly, but just so you know, Tom started his life as a doctor. He's an orthopedic surgeon. He began his medical career actually in his hometown of Austin, Texas, and is continuing to practice medicine today. But a doctor who not only practices medicine, but has a real estate firm with over 200 million in assets under management. Tom is the definition of motivation and inspiration, and to continue to strive higher and strive for more. So to bring Tom on a podcast for Gen Zs like ourselves, because my audience is predominantly people my age, the 23-year-olds, it's phenomenal to have someone like this, because that's what we need to push for. We need to push for greatness like what Tom did. Tom didn't stick to what, most doctors do, where they just look for one income stream. Tom diversified his income streams. Tom actually was able to create that financial freedom he was looking for, and he's still going. So make sure to check out his book on Amazon. Make sure to, Tom actually gives his email out in here. So if you want to email him and thank him for being on the podcast, send him a message. Make sure you subscribe to the More We Know podcast for more gems like this, for more interviews like this. I will continue to be bringing you guys value like this, but please subscribe, comment, leave a review. Thanks so much, and enjoy this interview with the man, the myth, the legend, Dr. Tom Burns, who also was forementioned on the Rich Dad Poor Dad book. So if you were a fan of the Rich Dad Poor Dad book, Tom was mentioned on that book. So thanks so much, guys, and enjoy. Here, I'm the host of the More We Know podcast for the Gen Zs and Millennials. I know I say it's for the Gen Zs and Millennials. And yeah, although that is the focus, this podcast is really for anyone. But I look back at my time in college and I wish I had something like this. I wish I had a podcast where I could learn from mentors or experts in their industries, or, fellow Gen Zs that are talking about real world topics, that are talking about what is a credit card APR, what is investing, what does all this mean?
Welcome to the More We Know podcast with your host and social media influencer, Mir. Gen Zs and Millennials.
Welcome back, everyone, to the More We Know podcast. My name is Mir, and today we have Dr. Tom Burns. Tom actually started his adult life as a doctor, trained in sports medicine as an orthopedic surgeon, and began his medical career in the hometown of Austin, Texas. Today, he actually continues to practice medicine because of the joy and purpose it brings him, but he has a phenomenal story of a doctor. As you guys know, doctors, fundamentally, they usually don't have these other types of passions with like real estate and understanding of financial knowledge. So Tom actually built that, and he's the author of the Rich Doctor's book, which he's going to speak about. Tom, thank you so much for being on today.
Thanks, Mir. Thanks for having me.
So, Tom, you have a book that came out. It's called Why Doctors Don't Get Rich.
Yep.
Obviously, this podcast is more for the Gen Zs and Millennials. We have 1,000 plus listeners of 21-year-olds plus. And when I posted your book on my social media, a lot of people started reaching out to me. Hey, I'm in medical school. Should I get this book now? Tell us a little bit about this book.
So this book, so I'm a doctor, right? So I've got a little bit of doctor credibility, but I wrote this book sort of to doctors, but for everybody. It's written to give hope and guidance to anybody that has a job, makes a paycheck, and just doesn't really know something else is out there. So that's why I wrote it. And it was sort of inspired by a friend of mine who wrote another really popular book.
That's awesome. So with this book, obviously you have a background. You started as a doctor. Can you walk us through your actual background? Where you went to school, maybe what your parents did, and just growing up?
You bet. So I grew up in Austin, Texas. Great town. And back then when I grew up, it wasn't that cool. Nobody knew about it. Now everybody knows about Austin, and all of your listeners appear to be moving here, and I would too if I was their age. I grew up here, went to school at the University of Texas, went to medical school in Dallas, did some what we call residency training in Cincinnati, Ohio, and then I'm a sports medicine doctor. So I did a year of sports medicine in Vail, Colorado. So that was sort of a 10-year round trip, and then back to Austin. So that was the doctor voyage.
The doctor voyage, I bet, right? And were your parents doctors or?
No, my dad was a cop, and my mom she had been a nurse, but long before I was really conscious about it. She stopped being a nurse long when I was a little kid. So knew a couple of doctors in the neighborhood, but that was about it.
So where did you get like the motivation to, hey, I want to go to medical school, I want to be a doctor?
Yeah, so I was always pretty good in school. That was fairly easy, but I was an athlete. It's all I did. I was an athlete. I did sports and chased girls. I was successful in sports, at least. girl. Yeah. So finally got lucky with a good wife. But so I was an athlete. That's all I did. Came to the realization I wasn't going to get paid to do that. I was pretty good, but not at that level. So I started looking around, and medical school and sports medicine was the aim. When I went to college, partway through college, when I realized I was not going to be a professional athlete, I decided to go to sports medicine, and that's what ended up. And that way, I could still hang around the athletes that I was used to hanging around.
And with sports medicine, have you worked with actual like sports teams and professional athletes, specifically like with Texas teams even?
Yeah, I've worked some. I've had there was a small college in town. I was their doctor for 19 years. I was asked to be the doctor for the University of Texas, but for lifestyle reasons, I actually turned that down. So that originally was my main goal. To be the doctor for University of Texas is a big deal. But 7 or 8 years into my practice, I realized that I preferred the freedom rather than the notoriety. I'm a physician for the United States ski team. So I'm doctor for the Olympic team. So I travel with them every year. I was in, where was I last year? I've been in Belarus, and last year I was in Kazakhstan. So this year I'm supposed to go to Beijing for World Championships, but we'll see what COVID does for that. So,
Yeah.
and then, most of it's weekend athletes like us, they're kind of normal folks that just want to stay put together. And there's been a lot of names I've taken care of in the past, so that's gives you a chance to meet some people.
Yeah, yeah, absolutely. And I mean, Texas notorious, you guys got some big sport teams out there too.
Yeah, we got some. Yeah, they're not doing so great, but we got them.
Yeah. it's the thought, it's the spirit. So, Tom, by the way, do you prefer Dr. Burns? Is there a preference?
And I answered a hey you. I answered anything. Call me Tom, please. I never
Okay.
even introduced myself as Dr. Burns. So
Okay, gotcha. You wanted to be mindful of that. So you went to medical school, and again, we have so many listeners here of Gen Zs and millennials. And when I posted about you coming onto the show, one of the biggest questions I got was, wait, so how did he afford going through not only college but medical school, which you rack up an insane amount of debt?
yep.
So that process of racking up that debt, I mean, clearly it was worth it to where you got to today, but obviously it wasn't just becoming a doctor that helped you propel that and do that, correct?
Correct. Absolutely. And your previous question I didn't answer. I wish I'd have had this knowledge when I was 21. Those that were asking, should I get this before I go to med school? You should either get mine or somebody else's. Just start getting a feel for this, because your life can be free, easy, and not free of conflict, but a lot more fun if the earlier you get this passive income. But going back to the question on the med school and the debt, I was a little bit fortunate. I went to the University of Texas, and I was in my hometown, so that didn't cost too much. Went to medical school, which is horribly expensive right now, but back then it was not for me. Now I worked, so I worked during med school a little bit, and then we had one year where there was a gap where we had 3 months off, so I worked. So I paid for some of that, but my debts were pretty small, tiny compared to what your colleagues are going to go through. It's just kind of small. So
Yeah.
but so that's a finance equation, whether or not it's worth it or not. But I tell you, most folks don't go into medicine because of the money. They usually go into it because there's a reason that drew them into medicine. And those debts get paid. Most of the folks I'm talking to are getting their debts paid, just depending on how their income goes as a doctor. But it's a lot easier to pay it off if you do something extra.
Yeah, for
Yeah.
sure. And it's hard to find time to allocate, right? In medical school, you're doing so much, so you have to really work to do that.
It is. You've really got to learn how to prioritize your time, decide what's important to you. And in med school's got to be important to you. So you got to do that. I found a little bit of time to do some work, didn't make a ton, but didn't have that big of a mountain to climb. Residency is the same thing. There's a little chance for some moonlighting and extra money, but you're pretty much working all the time. So that's a 7 to 10 year period where you do pretty much have to focus on what you're doing. But when you come out the other end, you got to, no matter what you do as a physician, it's a high professional income. You're going to come out with a reasonable income. Kind of forget the math on what you could have made the 10 years before, but once you come out, you're making reasonable income, and it's then that you can start prioritizing your time and deciding if you want to do something on the side, if you want to do something extra, there's always time to learn, always time to read, get on Zoom calls. So you'll find it if it's important to you.
Right, right. And this is actually one of the reasons I started the podcast. Back in March, I have a large following of this audience, but they were so lost when the pandemic hit, losing
Yeah.
jobs, can't go to college classes, everyone's home. There was just so much depression and anxiety. And I was fortunate enough to have some amazing mentors in my life, which helped me a lot. But I'm saying a lot of people don't have that, which is why we launched this, for that kind of free mentorship to come in. So would you say that, if you're a Gen Z or you're in med school or whether you're getting your MBA, whatever it is, there's no excuse not to find time to learn or to do things outside of it, right?
100%. There's always, I'll tell you, in med school, there's always time to do something else. We found time, we played. I learned golf in med school. How cliche is that? I was a tennis player and a baseball player, but I learned golf. We had time to do that. So, and you have to do that to keep your sanity, to keep your work-life balance and all that stuff. So there's always time. You'll always find time to read a book. You'll always find time to listen to a webinar or something, or listen to a podcast like yours. It's always there. You can do it when you're driving.
That's what's beautiful about a podcast, right? You can literally be driving to work listening.
100%. I am a podcast junkie, so I listen to them every day.
Awesome. And so, walk us through your actual career. You became a doctor, you're serving these athletes, weekend athletes, you're part of the Olympics team on the medical, which is phenomenal. What was it like, coming from that period where you were working dog hours, and residency? Historically, what I understand with residents is they're working 10 to 12 hour days and making 40, 50,000 a year. And
Yeah.
it's like an insane amount of work, right?
Yeah.
So
yeah, keeps you busy. So med school is just glorified college, just more information packed into tighter periods of time. And then the second half of med school, you're learning, but you're in the hospital. You're doing each different kind of medicine, learning stuff, kind of cutting your teeth. A residency, yeah. I mean, there'd be times you get there at 5:30 in the morning and you don't leave or sleep until 7 o'clock the following night. So 36 hours maybe staying up. You're young, you get it done, you learn stuff. But there was a lot of effort there, but again, still there was leisure time. There's vacation time. There's days when you're not working that hard. We all go through that. Even if you're not in med school, no matter what you're doing, you usually work long hours when you first start a job to pick it up and learn it. After residency, I did the what's called a fellowship, which was a year in Vail. And that's where I ran into all the stars and stuff and got to meet a lot of people. That was fun. We still worked pretty hard, except we didn't start office till 10 o'clock in the morning. So our office sat right on the slopes. So we would go up and get 5 runs in before we started office. So that was pretty nice. And then started practice, green, young, new, trying to learn how to run a practice. So I joined with a partner. And so you kind of, as in anything, you start getting the routine down. And I had already decided years before I started my practice that I was going to be doing something else. We didn't talk about, but I just bided my time and kept learning and started buying back my time is really what it did.
And Tom, you said something there. You said you decided years before getting into practice that you decided you were going to do something else. What was that decision, 1, and 2? How did you make that decision?
So the real story is, so I'm just like blindly in med school, athlete. Now I'm doctor. I'm going through things. Went through med school, had a great time. Went to residency, was having a good time, working hard but having fun. About 2/3 of the way through my training, it was 5 years. 2/3 of the way through my training, I'm starting to watch these doctors because we get trained by academic guys and by guys in the private world. So I'm watching these guys making what I think is just staggering amounts of money and driving big fancy cars and living in big houses and complaining they didn't have control of their lives. The insurance companies were controlling what was going on. Half of them would describe their divorces. The other half couldn't remember the names of their kids, because they're working all the time. I looked at these guys and thought, if those are the guys I'm supposed to emulate, that's not who I want to be when I'm 40, 50, 60 years old. So I decided I needed something that wasn't correlated with medicine, that possibly came in, there's effort to everything, but I wanted it coming in whether I was working or not. There's the premise of trading time for money, which most of us do. If you're an employee, you're trading your time for your employer to pay you some money. we doctors, we trade our time. We see patients to get a fee, right? We do surgeries to get a fee. So I wanted something that would come in passively. I didn't really know that term back then. So I searched, I looked at a number of things, and real estate is the reason I ended up on real estate is because it just moved slow and it kind of fit the lifestyle of a surgeon. I could do it part-time. I could do it with partners. I didn't have to stay on top of it like a stock trading account. So that happened in training. I didn't have much time or much money to do anything, but I learned during that while I was in training until when I got into practice, I was learning the whole time. So I had built that base of knowledge up, and then I was ready to go when I decided to pull the trigger.
And your first year of getting that, that high paying salary, were you right away pulling that trigger in real estate? Like you got your first property?
No, I wasn't. Kind of conservative. So I didn't want my family suffering because of my crazy harebrained ideas. I already had a good job. So I paid off a few things. And I was still living like a resident. So I was living like a student and making doctor money. So I took the delta and just paid bills off and made sure everything was kind of clean. Then I started putting that money at risk and putting my time at risk. So I waited a year or two to pay some stuff off.
Right. That makes sense. And, being conservative is always good while you're building up that cash.
Yeah.
So you getting your first property though. So how old were you when you actually got your first property?
A lot older than most. I was I had this I think I was about 35.
35. Okay.
So way older than your audience. So you guys got such a run. You guys will probably be free by the time you hit 35. I was 35 years old.
See, and that's why, when I again, like you and I were messaging, I got the book for my father, who's a cardiac surgeon, who I resonated with your story so much only because he's always working mad hours. And at the end of the day, it's still, you're not having that freedom, that complete freedom.
Right.
Which is why your book is phenomenal. And we're going to post those links in, but people do need to read that because even me, at 23 years old, it was great for my father. It was great for me. I learned so much.
Thank you. That's
So
kind of design. A lot of mindset in there. It's not really that much about being a doctor. A few doctor stories, but if you get your mind right, the ideas will come to you, whether it's real estate or stocks or something or creating a business, it'll come to you.
Right. So you got your first property at 35. What type was it? A single family, multifamily? What was it?
It was actually a single student property here at the University of Texas. So it was a campus property, and I forget why or how it happened. It was just time and circumstances that fell in place where I just bought that. I bought one and it made sense. It was cash flowed right away. So I bought another one, and pretty soon I got really good at West Campus. I got to know the market really well. I knew the numbers so well. And I tell the story that I bought one once. Your listeners may not remember, but there used to be newspapers where you'd read ads and stuff like that. And on Sunday evenings, it was way before there was anything on the computers. On Sunday evenings, you could look in the paper and they'd have ads for properties for sale. I looked at a property and I told my wife, I'm buying that property tomorrow. She said, how do you know that? I said, I know the market. I know the location. I said, unless it's, covered in slime and roaches, somebody's mispriced this property. So I actually slipped out the back door of my office, drove 8 blocks down to the property, looked at it real fast, made an offer, and came back and kept seeing patients and bought that property. It's what happens when you get to know your niche pretty well. So I bought a bunch of those, and eventually people started knowing I was in the market, so they brought me deals. Then people came in and started wanting to partner on things. And so as people brought deals and people brought in partners, the size of the deals increased a little bit, 20 units, 40 units. I spoke for a friend, Robert Kiyosaki, as you know, is a friend of mine. I spoke for him in 2001, and I was on stage and he introduced me and he said, Tom's from Austin, Texas. So at the break, a nice gentleman and his fiance came up to say hi to me, and they were real nice. They were moving from San Francisco to Austin, and they wanted a contact in Austin. So we just happened to meet at this conference, which was in Scottsdale, Arizona. Well, the reason for the long story is I got to know that guy pretty well. And about 7 years later, he and I partnered up, and he's my current partner in my private equity firm. So, things sort of take you down paths without knowing they're going to happen.
Right.
As as things got larger and I decided I needed a little bit of mentorship, I had a friend who was a developer, and I basically went to him and said, I like what you do. Will you teach me? And so I worked for him probably for 2 years for free. We just did land deals and build to suits and built banks and stuff like that. And I didn't get paid, but I learned a lot. And
Wow. I mean,
yeah,
a lot of great points there that I want to touch on, but just real quick to get this image right for the audience. So here's a doctor who you're doing procedures, you're meeting with patients, and somehow you're finding time to go see properties with, which mind you, you're saying was at a time you didn't have Zillow on your phone. You couldn't just look at a property on Zillow. It
not
was
at all.
all, you were hustling and bustling on your own. And on top of that, you were working for someone, like learning about development so you can, eventually build your own thing too. All that, like you were an intern, you were a real estate investor, a doctor, all in one.
Yeah. Man, I had the hots for getting some passive income. So it was a passion. So I found time. So, and surprised, it was easy to find once you really look for it.
That's a powerful quote. And that was because you knew your why, right? You knew you wanted more freedom. You saw that you had that scare back in medical school, right?
Absolutely. Absolutely. I did not want to not know my kids. I didn't want to be not in control of my time. And so that's the barometer and the GPS that guided me the whole way, as I wanted passive income and I wanted enough of it. My goal was to have enough of it to pay for everything I needed to live and enjoy life. So it kept me going.
Absolutely. I mean, that's the goal, right? That's why we want that income. And so, you mentioned Robert Kiyosaki, who a lot of the audience actually, I love his book, Rich Dad, Poor Dad, which is a great book. So this, which is actually how I also saw about your book too. I saw that foreword mentioned. So or is that like a friend of yours now? Is he mentoring you at the start?
So yeah, Robert and I, yeah, I mean, you may not know this. So I'm the guy that bought the very first book, the very first Rich Dad Poor Dad ever purchased.
You
I
were the
bought
first one who ever bought the
the
Rich
first
Dad, Poor
one.
Dad?
Yeah,
Wow.
it's hanging now in Robert's office. So, and it's a freaky story, but this kind of goes to the why, right? Having your radar up and your antenna up all the time. I was just getting my car washed one day, and I walked in to pay my bill, and it's one of those where they run it through the brushes and you go inside. And on this back corner, there was a stack of books and a paper sign that said "Books for Sale." And it was purple and gold. It looked pretty cool. It had the word rich on it. And I was reading books like that by the dozens, I said, let me see that book. And it said, what the rich teach their kids that the poor and middle class don't. And I thought, well, that's pretty cocky, but if anybody that can say that might have something for me. So I bought the book. And I went home. My family was out of town. So I was by myself, and I did a bunch of stuff and tossed the book on my office desk and went in about 11:30 at night and kind of, as I kind of opened it up and looked at it to see what I was going to read one day. And I read a few words, read a few pages, eventually sat down, and 4 hours later, the book was finished. And I told, I had to wait until, 6:37 in the morning. I called a friend and said, I have just read the best personal finance book I've ever read in my entire life. He goes, yeah, right. So I gave it to him. He said, I agree. So we called the publisher, find out who this guy is, because nobody knows who he is. And what we didn't know is the book was self-published. And so the phone number on the front of the book, who do you think answered? It was Robert. Robert answered. We said, wait, who are you and what's the deal with this book? And he says, who are you? And so there were 24 books in this gas station, in this, car wash. I bought them all. I went back the next day, bought them all. And I've since given all but one away, but I kept the one I bought. We flew out to Scottsdale, met Robert. He taught us how to play cash flow. He and I have been friends ever since. So I've spoken for him on stage. I've had him come to Austin and speak. And over time, his book got pretty well known and kind of went through the Amway system, the network marketing system, and that caused a lot of books to get bought. And because of that, Oprah took notice. And he says as soon as he was on the Oprah show, he became famous. So we've been buddies for a long time. So he
Wow.
has, yeah. So
That's awesome. I never knew that you bought the first book. That's phenomenal.
yeah, and it's his fault that I wrote the book that's in your hands. He just told me one day, I'm in Robert's mastermind, and he said, Tom, you got a story, you ought to write a book. So I'd never written a book. It's my first book. I've written a few chapters and some articles and stuff, but so I said, okay, I just okay.
Yeah.
Why And then I actually kind of grew, and there was a lot of personal growth as I wrote the book. So I blame him for making me write this book.
Uh, he's gonna expect a check later.
That's right.
So, that's awesome because one thing I love about Robert is I was listening to him on a podcast actually last month where someone asked him, Robert, how do you feel about all these, your books have been like plagiarized? People are just downloading them and giving them out for free. And Robert said, that's actually amazing. That's free marketing for me. My name is getting out there more. I love his mindset, how he looks at things with things like that. I'm following him when he talks about the Federal Reserve and the stock market and everything he talks about. He's such a phenomenal and interesting man.
Yeah. He's a good thinker. He studied with Bucky Fuller, who was a big thinker. And, it was 12 years ago. He kind of predicted there might be a downturn. So he likes to look macro. Now he's got plenty of money. He doesn't have to do anything.
Yeah.
He can still make money, of course, but he's a real teacher. And that's the thing. He has a big passion for teaching folks. And that's what I really respect.
And have you and Robert done like real estate deals together?
We haven't done a real estate deal. We've done an oil deal together, but not a real estate deal. So he does all his stuff with Kenny McElroy. So, and Kenny's another friend and who's owned 10,000 units of multifamily. So he's a pretty good guy to go with.
Yeah, right. Yeah, exactly. And so, going back to where we were at, you said so 35, you bought it was a single family or it was a multi-family in the college campus?
It was a single condominium. I'm not a big fan of condos, but that's where I
Yeah.
started. You
Yeah.
don't have much control. I bought a condo and then I bought, 11 or 12 more in pretty short order.
And
Uh,
do you still have those today?
I have almost all of those. I still have 9 or 10.
9 or 10. Okay.
I don't like to sell. It's just nice to have something that just keeps kicking off cash flow.
Right. And so you have these properties, but you mentioned something, you also have your own like private equity firm.
Yes, I do.
Can you explain to the audience what a private equity firm is?
Sure. So that partner that met me at the seminar in Scottsdale in 2001, we started doing deals together, and then we built our first large multifamily in 2009. So we formed a small company then. And then about 4 years ago, we hired some employees. Went ahead and got a physical office, and so it's really private equity / syndication. What we'll do is we have a large stable of investors. So we raise money for our own deals where we operate and manage. We'll build apartments or we'll buy them. We operate and manage those. Occasionally, we will put a fund together and put money into somebody else's deal, which is sort of more of a private equity function. So what we do is gather investors' money and give them a return plus their money back over time.
Okay, so is it almost like if you're familiar with Fundrise, the crowdfunding platform? Is it like that?
It's similar to that. Yeah, it's sort of the precursor to that. Ours is more based on uh, less social media and internet function and more kind of person to person. It's kind of old style analog, and we do meet people through the crowdfunding type system, but we know most of our investors.
Okay. And is it accredited only or is it open to everyone?
It's it's mostly accredited only. We at one time we were able to do it's called an SEC 506B, which allows sophisticated investors and accredited. It's just hard for us to do that because now we're so out there now. We're out on LinkedIn and Facebook and publishing a lot of stuff that we do all of our deals as a 506C, which is accredited only.
Gotcha. Okay. So now are you still purchasing your own individual properties or is everything solely through this?
Most everything. I'm still investing. So, I kind of split things. I put money into my company's deals, and that's where most of the investing goes. But I still look for other things. If I've got something that it's not in my wheelhouse and I think it's a good deal, I'll invest with somebody else. So I'll just be a limited partner in somebody else's deal. I buy some alternative things and I buy some energy stuff. I buy some oil things occasionally. So still keep my hand in.
Yeah. Yeah. What about, talk about oil. Are you a fan of the stock market?
I am not. Not that it's a bad thing. It's just not good for Tom Burns. I was in for quite a while. I actually got out right before the Great Recession and wasn't smart enough to get back in when it was 6,700. So I pretty much stay out of the stock market because the real estate and cash flowing things have done better for me. if I ever get so much money I don't want to know what to do with, I'm going to have to go back into equities, but not yet. Yeah.
And does part of you like feel like you missed out when you look at that March correction and you see, the S&P is up 50+%, all the, the largest ETFs are 50% plus in under a year. Does that make you feel like, oh man, I should have got in?
Yeah, I still look at that stuff, but I realize, it just takes mind share that I don't have time for to kind of keep that. And I'm not a big fan of giving somebody else my money and telling them to handle it. So while I wish I could have caught that upswing, I'm not too sad about it because I made the decision 12 years ago, just to not be in the market.
Yeah. Yeah. And obviously none of us are giving investment advice here for the podcast, but do you think it's smart to, if you're putting a little bit money away every week, just in the S&P 500, not individual stocks, but just something that you're not thinking about, or you'd avoid the S&P, you'd avoid the market altogether?
I can't say avoid the market. There's plenty of people that have done great in the market, just not so good for me, just because that's where my mindset is. And you're right. We don't give investment advice, but you did say something that was key, was put away something every week, every 2 weeks, every month, whatever your pay period is or whatever time you choose. That's the old premise of pay yourself first. And it's amazing if you just don't think you have enough money and you peel off 10 or 15 or 20%, if you put it away and don't touch it, you'll find a way to live on what's left. And that grows over time. Time is one of the best real estate and investment tricks in the world.
Yeah.
You look smart.
Yeah. But I mean, one thing I realized for me when I started, obviously, I know you're not a fan of stocks, and for me, I'm still hesitant with stocks, but when I saw like every few months, I was getting a dividend paid from AT&T, from ExxonMobil, from some of the largest, dividend aristocrats, companies that have sound balance sheets, companies that have paid 50 years plus. That's when I realized that I have to make as much earned income as possible so I can put it into this that's going to give me passive income.
You bet. I think that's where I'd go if I'd go to dividend stocks. I just like that passive income DNA,
Yeah.
That's
excellent. So if we go back now, let's say Tom Burns, you're back to 21 years old. Again, we have an audience from 21 to 30 here. What are you telling your 21-year-old self to do differently? Or maybe not, because you've had phenomenal success, but what would you tell yourself now?
Keep my eyes open a little bit more. I feel like I've missed a lot of opportunities. That happens. I've made tons of mistakes. I can't say I wouldn't want to make those mistakes again because they made me smarter. They've kind of gotten me to where I am. But I enjoy still being a doctor, so probably would still go do that. Well, maybe knowing what I know now, I'd probably go do something else and I'd be free when I was 35. So what I'd tell me is, number one, like I just said, start paying myself first. Whatever I'm doing, I don't care what it is, save a certain percentage of it so that I can have some dry powder to invest either in a dividend stock or some real estate thing. And start earlier. Find out what you're good at and do more of it. I have lacked a little focus over time. I've kind of gone to different industries, and maybe if I'd have just stuck with some stuff I got pretty good at, I might have gone faster. So mine was a slow growth, and it can be done a ton faster than the way I did it.
Speaking of growth, did you have any mentors along the way?
Yeah, I think I did. Robert, by virtue of being with him for 22 years, I read every book he wrote. I talked to him a bunch. I've been to seminars. The gentleman that is still my partner, the one that I went to work for free. Well, by the way, that free work turned into a really large medical complex that we both own. So I learned a lot. I learned how to develop commercial office buildings from him. So I consider him a mentor. And then the rest are probably, books and, now seminars and webinars and things like that. I've gotten it from a bunch of people,
Yeah. And now you can go on a podcast, you can go on YouTube and get free mentorship from just anyone.
It's great. I'm listening to a guy named Darren Hardy now, kind of personal development. He's been there for a long time. And I've got a huge podcast list. It just depends. If I want to learn something technical, I listen to that. If I want a little personal development, which I seem to be gravitating to that, I just turn on one of those. So they're everywhere.
Yeah. And it's key that you say it's everywhere. Like for me, yesterday while working, I was listening to a podcast with Ray Dalio. And for me, I'm sitting there like, how the heck are we in a world now where I can just listen to one of the greatest, hedge fund owners or investors of our lifetime?
Yeah, you never had access to him. You couldn't pay enough to get access to
No.
him. So, I played golf this morning with a guy that's worth $100 million. I just sat and listened to how he thinks about things. Uh, so you pick up stuff from everywhere. So that wasn't paid mentorship, and I'll pay. I don't. It's just investment. I just keep my ears open and tend to investigate when I hear something that sounds cool or sounds like it might push me forward.
Right. Charlie Munger, Buffett's partner, has a quote where he says, to get more successful, you have to continue to ask why, why. Isn't that
Yeah,
kind of what you're doing? You're keeping your ears open, but why are you doing this? Why are you investing in this? Why are you doing that?
absolutely. I want to know the thought process. It's easy to look at a spreadsheet, but I want to know what the thought process to look at it.
Right.
Absolutely.
Right. So if we're trying to get started in real estate, your firm has hundreds and millions under management.
Right.
Obviously, the common person doesn't have that type of money or that type of network to get into that. You know, what would you do? Would you get in, like, if you're 22 and you only have a little bit, you're talking 10, 20, $30,000, what type of actionable insight would you take?
And that's where I started. The first investment wasn't much, 16 grand or something like that. I would, I'd listen to podcasts that talk about real estate. There's a number of them, and usually with that kind of money, you're talking single family home, that sort of thing. And it can be done. You can buy turnkey single family homes. There's guys out there that do that, or you can you can listen to the podcast. You can find meetup groups. They're everywhere. Wherever town you're in, there's a real estate meetup group, and there's going to be somebody there that's done it. And you'll start learning about your market. You'll start finding out what people are doing, and then you'll start looking for your own deals. And that's where you learn the most, is doing your first deals. So, I do talk about book learning and seminars and podcasts, which is great. You kind of get your greatest education when you get in the game, when you start taking some action. So once you put that money away, and you think you've got enough, start looking at something in your price range, and your education goes like this, and hopefully your cash flow goes up too.
Right.
I just
And,
started.
and yeah, and you've had obviously phenomenal success, but what about in terms of failure? Have you had some properties that didn't cash flow, that failed? Was there any type of failures you had?
Yeah, I wouldn't be sitting here without a bunch of failures. Yeah, I've
Mm.
had, I've had, gosh, I've had investments. I've invested with stalwarts in the community that are in jail now, lost money. Uh, I bought property. I bought a 22 unit apartment complex, which sounds like I was ahead of the curve. This was in, mid 2000s, early 2000s, which and apartments have been great since then. Unfortunately, I didn't know what I was doing. So I barely got out of that with my money. I have lost plenty of money investing in other people's deals, bad partners. Yeah, I got plenty of failures. Now, as far as our real
Mm.
estate company, we still can say we've never lost investors' money. So there's always been a positive return. Not always what we predict. We hope to underpromise and overproduce, but I know we've had one in the last 3 years that wasn't as good as we promised, but it was still a pretty nice return.
I
Yeah.
mean, it's awesome that you
Yeah.
can say, especially in these markets and this economy, it's phenomenal to be able to say we haven't lost investors' money, even if
Yeah.
it didn't meet the goals. That's a phenomenal thing.
Far,
I
buddy.
think you're hitting it on the money with the failure thing. My generation, we suffer with nowadays with social media. It's a pro and a con. It's a double-edged sword because we see these lifestyles and we think we need to be at this place by a certain age, but a lot of these lifestyle entrepreneurs that you see on social media, they don't highlight the failures so much. And I appreciate you bringing up these failures and the real world problems of investing with people that have went to jail, or investing with people where you lost it all, and from what I'm hearing, a lot of it, the reason those failures happen are either, integrity of people that you're working with, trusting their word, or just like you said, that 22 unit, you didn't know enough about it. So it
Right.
wasn't like failures that necessarily just out of the blue. There was reasons behind it, which you took to create success for your future.
Right.
Correct?
Learn some lessons. Yeah, and it's tough. Yeah, social media is, yeah, everybody's wonderful, right? And I still look at that. Even in my industry, I look and think, how are they finding that property? Because we have a full team to look for properties to buy, and we're not buying anything right now because nothing makes sense. We're building. So I guess what I'm getting to is, yeah, don't let that get you down. You're only seeing pixie dust when you're looking at social media. There's a lot of rust behind the curtain.
And how risky do you think it is getting into actual real estate? Obviously, any investment is risky, but how risky specifically is getting a single family or a multifamily?
And I'll use a Robert Kiyosaki quote, which is true. It's not necessarily the investment that's risky, it's the investor. So if you have never done anything and never gotten mentored or never read a book and you just go out and buy a house, you're going to get your lessons. That'll be risky. So the more you learn, the more you hedge your risk. There's risk in anything. There's risk in buying that AT&T stock, that it's going to stop producing its dividend, or some tech comes along and replaces it. Unlikely, but there's some risk.
Yeah.
Same thing with real estate. There are risks out there, but if you know the game, they're just, it's like getting up and brushing your teeth in the morning. You know how to hedge those risks. So it's education. Get yourself educated.
Yeah. And now for you, you're on a much higher level now where it's not only your properties, where at the end of the day, God forbid something went wrong at those times, you got to deal with, yourself, your wife, whatever, right? But now you're dealing with investors' money. So it's a whole different ballgame, right?
It is a way different ball game. I've lost plenty of my money, and I still wouldn't sleep at night if I'd lost my investors. So as soon as you take money from an investor, it's great I love talking to people. It's a lot of fun. As soon as you take money from an investor, every time I always get that little hitch, that little catch in my breath, hoping that this project, hoping we've underwritten the project properly and nothing crazy happens and we give them what we promised. So it's a big responsibility. It's huge.
Yeah. And here you are, I really have never heard of someone like you where you're a doctor, you're doing procedures, operations, and still going out, raising money, building a company. So it's a phenomenal story. And I know a lot of people are going to be intrigued to see something like this, number one. But number two, can you talk to us about the importance about sales? A lot of times people think that you don't have to be a salesman, but even as a doctor, look at you in your position, how important is sales?
Oh man. Robert Louis Stevenson, everybody sells something. We're all in sales, we're all selling ourselves by the way we dress, by the way we act, how we interact with people. So sales equals income in a lot of everything. Let's put it, if I was a doctor, I'd probably still make some income, but if I was mean and nasty and wasn't nice to my patients, they'd come once and they'd go see somebody else. And I'd have an office of 2 or 3 people a day that just like mean and nasty people. So it is sales to be nice. To interact properly. So if you know how to sell, you'll always be able to make money. And sales is not convincing somebody they need something. It's finding their needs and satisfying their needs, or helping them understand what their needs are and how they can be satisfied. That's real sales. That's all I do as a doctor. I sit and listen, and they'll tell me what their problem is, and I'll kind of formulate what the issue is, and I'll give them some options for how it might be better. It's still their choice. That's just what you do when you sell. So sales is very important.
So you think coming out of college, if you don't get the PwC, the JP Morgan, the investment bank job, do you
Yep.
think it's smart to go into a sales job, like a hardcore hunter sales role?
Maybe so, man. It's cold calling is no fun. It's scary. Uh, it's horrible to be told no, especially 99 times in a row. But makes you smart, makes you hard, makes you realize that prospecting or looking for sales leads is where you get it. It's all in the numbers. It's not fun. You don't make a ton of money, and it's scary. Um, as a doctor, I can't say I've done that. So easy for me to say I haven't done it. But most of the folks I know that have really come out with a good attitude about what they're going to do. They kind of know what they're going to do next, and they can take those skills now and use them.
Yeah. But with 100 millions under management, you are presenting to investors. What's that process like of actually preparing that presentation and dealing with the questions? You got to really know your numbers. You got to really know what you're selling them on, correct?
Yeah. So we kind of call it education. We just tell them what we got. And then, of course, there's lots of questions. So we will, once we're through finding a deal, finding a property, working with all the people that are involved. If we have partners, our deals sometimes take 18 months to put together before we bring it out to the investors. Once it's time to come to the investors, we will send out a 1-page to our list. And we've got, over 3,000 people on our list. We'll send it out, and it'll say, hey, we're going to build this apartment complex. It's going to be 350 units in this town, and we really like it because of X, Y, and Z. Just 1 page. If you're interested, let us know. Those people will answer. And then we have a 40-page operating memorandum that basically says, here's what it is, here's why we like it, here's all the numbers that back it up. We have a $40,000 a year program that we use to make sure that this property is needed in that part of the world, or that part of that city. We have people in our office that do all the underwriting and the numbers, and we gather the tax numbers. So we gather all the numbers and we present it. And it's then that the investors will call and say, either, if there are old people that have been around for 15 years, they'll just say, I'm in. But new people will say, yeah, I'd like to do this. Can I call you? And that ends up being my job a lot of the time, which is the fun part. You can tell I like to talk. I talk too much, but I'll answer their questions. Where's the risk? Where's the problems, that could happen? Why do you like it? How does it compare to other properties? What kind of numbers do you expect? So we answer them directly, because if we educate them, I never ask anybody for money. I just educate, and they say, can I be in that deal? We say, sure, or no, if it's full.
So whatever it is, whether you're presenting to investors or whether you're starting your first day on the job, you have to educate.
Yeah, absolutely. Yeah, that's that sales thing. So yeah, we feel we don't sell deals to investors. We just tell them about them and let them come ask.
Right.
So
Because
right.
at the end of the day, if you're selling something that's good, it's almost like a moral obligation. You're selling something that someone needs. So you're not actually saying, hey, here, take this, as like a car salesman. It's more about actually, hey, this is like you said, you're not selling it to them. If it's a good property that's going to make the money, that it's a no-brainer for them.
Exactly. And I've bought it too. So, by the way, I bought this thing. Do you want to come along with me and buy it too?
So every deal that you do, you're in too?
Yeah, we invest in our deals. Yeah.
So your private equity firm, how many employees do you have?
There are 6 of us.
6.
So we have, and that's counting the 2 principals. So my partner and I, administrative director, operations, acquisition, and development. And then we have a fractional CFO. So there's 6.5 of us.
That's really cool though, that you're able to still practice. Again, you are practicing now, or you're not?
I'm still practicing. I don't do it a lot. I don't make much money at it because I don't work a lot. So like today, I should have seen patients, but I played golf instead. It was nice. So I work about 2 to 5 mornings a week. I don't work in the afternoons because that's when I have to go to my real estate office. So it just depends on what's on the schedule. If I'm traveling, I don't work. I've got an assistant that can see people for me while I'm gone.
Mm-hmm.
But I enjoy it still.
Yeah. And how many hours are you working with your real estate company a week?
Oh gosh. If I'm even working in the real estate world while I'm seeing patients, in between. Thank goodness for the smartphone, right?
Mm-hmm.
So I mean, starting usually from 5:30 to 7:30 in the morning, 8:30 in the morning. I will slip in some exercise, but I've usually got my nose in the real estate, and then starting at about 11:30 or so, I'm on it until maybe till the afternoon, or maybe till 8 o'clock at night. So I'm usually doing something till about 8:30 at night.
Right. And I remember one of your initial goals, which a lot of us have, is to have enough passive income where you can have the freedom to not work as much. Obviously, nothing is truly passive in life. You still got to work, but you know what I mean? Exactly. So, I mean, what's the point, I guess, of still putting in all these hours? I mean, obviously you're helping investors get great returns, but you're making great money. What's the point with the passive income to continue to, what's your why? Why do you still do it?
Yeah, it's incurable attention deficit, isn't it? Yeah, I mean, I just did a deal where I'm talking about my core values. I did a whole seminar, and they had us drill down on our core values, and I ended up with adventure, growth, and connection. So connection's what you and I are doing here. Adventure is all those trips that I take, and growth. If I'm not growing, getting better at something, I feel like I'm going to stagnate and become an old man. And I don't want to do that. So I think it's a little bit of craziness, but I'm happy doing it. I don't have to do all that stuff, but that's why, I want to connect with more people. I've now got a real burn for trying to teach people about this, because I didn't realize so many people had no idea they had options. So there's my new mission. So, and that can be a 20-year mission. So it's kind of continued growth and meeting new people, the excitement of the unknown.
Yeah, that's the biggest. And I look at, your friend Robert Kiyosaki, who has all the money in the world too. I see his net worth is 100 million plus on Google or something like that. And he's still selling, he's still working. He doesn't have to, but he's still teaching. Like if I go to his Twitter, he's still talking about why you should buy Bitcoin, gold, silver, and stay away from the Federal Reserve and all that. So he's still working. So I guess that's that why of that, wanting to educate and to help others.
Yeah, I mean, how many rounds of golf can you play in a row before you get sick of it, right? You can only lay on a beach for so long. I think as humans, we need some kind of purpose. Purpose keeps our brains engaged, keeps us excited. And if you can balance that purpose with the leisure time that you want, whatever that ratio is, then maybe you're a happy person.
Mm-hmm. And you think for people that don't know what their purpose is, what do you recommend to help them find their purpose, their God-given talent?
Yeah, it's tough. It's tough for searching, it's tough to sit down and say, I need a purpose. I would say interact with as many people as possible, go to something different. Go to that party you're too tired to go to, or go to that seminar that's, really kind of inconvenient. Because every time I've done that, I've ended up meeting somebody that I didn't expect, and it's taken me off on a path that may have lasted for years, or I've ended up getting a deal. It's connect with people. And then something I've been trying to learn the last several years, which I'm not great at, is quiet time. People talk about meditation. I tried it for 2 years and I'm horrible at it. But I found that I meditate and my brain opens up when I'm in nature. So I hike a lot. I just go out in the middle of nowhere and ideas come to me like crazy, and I'm on my phone, right, dictating them. So just have whatever your quiet time is with yourself, and just kind of see where your mind goes. You can take some goal setting courses. That's a little more of a concrete suggestion. And I've actually done that myself. I've been sort of on a goal setting quest the last 4 or 5 months. So I read goal setting books. I've gone to several seminars, and I've hired a mentor. So I'm sort of all in when it comes time to do stuff like that. It'll
Yeah.
come to you.
Yeah.
And we don't always find our purpose when we want it. Sometimes it may take a little time before it just hits you in the forehead.
And again, with that purpose, you shouldn't look to social media, right, and see what other people are doing. You need to actually take that time for yourself. Yes, like you're saying.
I think so. I mean, it's always good to stay in touch with what's going on with the world, but don't make that. Well, I personally don't like to make that a big part of my life, because
Yeah.
that's not your most authentic delivery of content. So
Yeah.
and what you're getting alone by yourself is authentic.
Yeah. Yeah. Absolutely. And you speak about a development course, for example. This was something I was just curious about because you have such a wealth of knowledge. I know so many people would be interested in. Do you think you'd ever launch like your own real estate course? Like, so many people have interactive courses. Would you ever launch a course that show people how to find the deals, how to negotiate them, how to see what's cash flowing, what's a cap rate, all those things?
Oh, it's exciting. I will in time. And I'm kind of one of those, so I'm not doing all this for the money, of course, because I don't
Mhm.
need it. I'm not super wealthy, but I've got my freedom, right? So I have decided to first learn how to properly put out some good information. I've got a website. I'm starting to put out emails and blogs and videos and things like that. So I've decided to first get all that smooth, and then over time, I think as I listen, people will tell me what they want, and I probably will produce something, but I want to just keep it. I want to kind of do it for the right reasons now, until
Yeah.
people are just begging me and got their hands around me, my throat, saying, please do something. So, but thanks for asking. I think that'll come at some point.
Yeah. Okay. Well, we'll definitely stay in touch for when that day comes too.
Okay, thank you.
Uh, so you brought up something interesting. You said, you wouldn't consider yourself like the definition of wealthy, but you do fine. What do you consider in terms of definitions? Someone who has money, who's rich, who's wealthy. Like, what's the difference, and how do you quantify it?
So, okay, so that's a deeper question. Depends on how you make your money. I mean, if you're a neurosurgeon or a big time lawyer, and you got tons of money because you charge big fees as a lawyer, or your big doctor money, that might be, my friend Gary Keller calls that rich. That's lots of money. But that person gets hit by a bus, or has a stroke or something, and the spigot cuts off. Do they have things in place where they've got money that can come in after that? passively, so to speak. So wealth is based, in my mind, wealth is the ability to control your time, the freedom to decide what you want to do and what to do with your time. And that comes with passive income. So in the book, I kind of describe, you can have a lot of money and still be poor. You could have a $100,000 a month income. And if you're not good with your money, you could also have $100,000 a month expenses. And I've known doctors that have big salaries and bigger expenses. So wealth is basically, as Robert says, the number of days you can survive without having to work. So when that becomes infinite, then you're super wealthy. I believe you're wealthy when you have all your time. If you can live, be happy, and not have to work, then the world's your oyster. You wake up the next day, you can decide if you want to increase that wealth, or if you want to go to the beach, if you want to go play golf, or just chill and binge on Netflix, So that's wealth to me, control of that time.
And it gives you that time, right? Where if, hey, I want to do a private equity firm, or hey, I want to go golf, you have that freedom. But with passive income, I guess it's subjective per person, right? But what's a number that someone, my audience can shoot for of passive income in their 20s, on a yearly? I don't know if you're able to answer that directly, but what would you say is a good goal of passive income to shoot for in the 20s?
There's not an answer. It's the one everybody hates. It depends, right? If your salary is $40,000, first goal is going to be 40 grand, right? Over a year. So the real answer is anything. I wanted something that produced money, and maybe the first thing might have just produced $100 or $200 a month. But man, that does something to your soul when you get that check and you realize I didn't do anything to do that. I did all the work over here. And then each month I keep getting that same check. That just fires you up and gets you going. So get anything, just get that seed, and that'll change your brain structure, and it'll get you going to getting whatever that number is. Because if your salary's 40,000, your freedom comes at 40,000 or slightly less, actually, for tax reasons. You don't have to make as much passive if it's it doesn't get taxed as much. But that's your number. And then of course you might want to increase your lifestyle. So you just keep building on that. You're that doctor who makes $500,000 a year. That's a big number, but he's got maybe more money to invest. So it's all a depends thing. So I think I'll boil down to my final answer is just get at least $1 a month that comes in where you don't have to work for it. That will change your brain and make you go get the rest.
And if you're trying to do that, that comes in the form of whether it's dividend stocks, real estate. Do you have any other ideas for people on how they can develop that passive income?
Yeah, I mean, there's stocks, there's real estate. That's just my two main favorites. I mean, you can passive income wise, there's some alternative stuff. There's some things sometimes you can. A lot of them are limited to accredited investors. We buy ATM machines, we buy oil well things. Those are all accredited deals. I think that's why a lot of people gravitate to real estate, because you can be 18 years old, go find a good deal, and you can go buy the thing. And if you don't have the money, you can put investors together and buy the thing. So I think it's easiest to start with stocks and real estate when you're at that age.
Sure, that makes total sense. And when you think of stocks, obviously you worry about that day where, right, AT&T, if somehow T-Mobile comes up with something that completely takes them out, you worry about that as an investor because you don't have the control. In real estate, I get that you have the control, you find the property, you do your due diligence, etc. But what happens if you go through another 2008?
It'll be painful, but if you buy your property right, then you get to keep it. Maybe you don't make any cash flow from it. Maybe you've got to lower your rents, which you have control over. You can lower your rents and still put people on that property. And maybe it's just enough to cover your mortgage and your taxes and insurance, but you still have that property and you can go along until things turn up. You can't call up Bill Gates and Warren Buffett and tell them to, pull the throttle on Berkshire or Microsoft. Right? So, yeah. Can you lose properties in real estate? Absolutely. Every one of our offerings we put out says, hey, you might lose all your money. They have to say that. But as you get educated, if you buy right, you'll be okay. And I think you can be just as educated in the stock world too. Companies that have big cash balance sheets and are solid and buying back their own stock, and not a lot of debt, those are good companies to buy. That's what Warren Buffett buys. He buys companies rather than just stock.
Yeah. And Buffett adopts your style. It sounds like, aside from the development of what you're doing at the start, you were looking for that cash flow. Buffett buys no-brainers, companies like Coca-Cola that produce billions and billions of cash.
Right.
Just like
Yeah,
real
I
estate,
know
you're looking
Warren.
to
He's probably, he's always wanted to be like me.
right?
It's a basic tenet, cash runs the world. Richard Branson says cash flow is the lifeblood of business. It's the lifeblood of your personal life as well. If you've got cash, you can do what you need to do. So that's why when you ask me what's wealthy, well, a big balance sheet is nice, but if it doesn't produce any cash, you still got to pay you still got to pay your mortgage or pay your utility bills. So cash is where it's at. And what it does is if you've got that cash coming in, it gives you the ability to sit back and see what you want to do next. You've got a portion of even if you get a little bit of cash flow, whatever your salary is, if you get a little bit of passive cash flow, it takes just a slice of pressure off of you. You can use that for something extra, or you can use it for part of your lifestyle. It's your choice, grow it or not. So that's kind of the whole point of the book. Just develop some sort of passive cash flow. I can't tell you exactly how to do it, but once you get it, you'll get the bug, and they'll put you on your way.
Yeah. And something you talk about in your book was you talked about taxes, tax shelter, how, tax benefits, which again, the audience, you have to go read the book. You go into detail about that. So it's phenomenal. But, like you said, let's say a doctor's making 500,000. How much, when you're getting taxed at 37.5%, and then not to mention your state tax and whatever the heck tax they add on top of that, you end up paying 40 to 45% of taxes.
Sure.
You talk about it in the book as a doctor. It's high income on paper, but once you're said and done, it's about like you're left with about 250. I'm exaggerating a little bit, but you get me.
All right. Yep.
So that's again where it comes into the question, what's wealthy, right? Because real estate, you deal with different things like depreciation, the tax benefits, whereas you can make a high salary, but if you're getting taxed one half of it, what is a high salary, right?
Exactly. And you buy real estate correctly, you only need to make $250,000. That's a lot, but you need to make 250 grand a year. You could probably free that surgeon up from ever having to work. So it's and I've absolutely known a doctor that makes $600,000 a year and was looking for money at the end of the year. So it's just, brain death. So, we can get caught in those things. So live right, live on less than you make, whatever it is that you make, find a way to live on less than you make if you can. Save that delta so that you've got a piece of something to use now that you've learned all your stuff over here in your books and podcasts and webinars, and get a partner who's maybe done it before, or go do it yourself, whatever your risk profile is, and go do it. You'll get on that one property, you'll get the same amount of education you've gotten during all that time listening to podcasts.
Yeah. That's $1 million financial advice right there, free. So that's phenomenal advice. Thank you for that. So, the last question about real estate, single family or multifamily, what do you prefer and why?
I prefer multifamily for a particular reason. I only owned one single family, and I actually bought it for a quirky reason. There was two houses on the lot, but it had an AT&T tower on the back of it. AT&T tower auto deposited all the, it covered the whole note. So it auto deposited every month. So the houses were kind of to play with. And then I bought my wife wanted a single family home to learn her own real estate. So we bought that for her. We're about to sell that. So she made a profit.
Nice.
The reason I like multifamily is, going through 2008, I had investors that I had personal guarantee. I had debt out to investors and personally guaranteed by me. I paid every one of them. And determined that going forward, I want to make sure I have what's called non-recourse debt, which is there's recourse and non-recourse. You buy a house, it's recourse debt. You are responsible for that entire note. You've got to pay it off or the bank's going to come after you. In the multifamily world, most of it's non-recourse debt, which means the property is underwritten itself. The bank is lending you money based on what the property's worth. You still have your equity in the property, but if Armageddon hits or a meteor hits the thing, you can just walk away and the bank takes the property. So for that reason, I like the debt on multifamily. I like the scalability. You increase rents by $10 a month, which isn't very much for those of us that pay rent. But if you have 300 units, all of a sudden you've got an extra $3,000. So that increases the value of the property. So I like the debt, I like the scalability, and I like the runway for multifamily over the next 5 or 10 years. We're still underbuilt. There's a lot of and prior to COVID, we were behind in building apartments anyway, but COVID has actually produced a surge in potential renters over the next several years. So we're way underbuilt. So that's why.
That's great to hear, even with, a decline with COVID, that the surge is continuing in multifamily. So that's an interesting concept you bring up about debt. So if you go get a 3 flat and, God forbid the situation happens where you got to go, you go bankrupt for it, you don't have to pay the full thing personally, right? Because it's part of the bank because of that you mentioned, the recourse.
That is correct, because the bank underwrote it and realized, okay, we know that worst case, it's going to be this much. So they lend you that much and you pay the rest with your equity. So the bank just takes it back and you walk away. So non-recourse is nice.
It's a master class right there.
Yeah. And you can't do it on single family homes. You can't do it on a fourplex typically, but you start getting above a fourplex into what they call commercial real estate. And there's, government agencies, agency debt, Fannie Mae, Freddie Mac, that they'll start lending you money on those smaller properties.
Okay. And do you non-recourse? Do you like Section 8 or no?
I don't do Section 8. We provide affordable housing, but we usually do that with public-private partnerships and public finance corporations and bonds. So I don't do Section 8. Those that do it seem to like it because they get, guarantee a payment.
Okay, great. That's some great information. Thank you for that, Tom. I know the audience will appreciate that.
You betcha.
As we get here into the conclusion, I want to ask you, put yourself for a second in the shoes. You're the commencement speaker for whatever university, whatever student is listening right now. Yep. As a commencement speaker, in 30 seconds, what's your commencement speech to college graduates right now?
I tell them, don't let the media think the world's falling apart. It's been falling apart for thousands of years. And if I'm talking to a commencement group in the United States, still the greatest country in the world to provide opportunities for people. Never stop growing. Always continue to get educated. And always believe in yourself. Some of the things that hold people back is limiting beliefs and not believing you can do something. But there's too many real stories out there of people that just had a burn and had a passion and without knowing anything, just jumped off the cliff and went and learned what they were doing. So always try to be a better version of yourself tomorrow than you are today. You want to be, the person you most admire wants to be you 10 years from now, as opposed to right now. Always try to get better and always try to serve. The more people you serve, the more benefit and bounty comes your way, whether that's money or relationships.
Wow, that's powerful. I love that. That was a 30-second speech right there, and it was phenomenal. So thank you for that. And would you say failure too? You should welcome failure?
Absolutely. You won't enjoy it, but never allow a good mistake to pass by without learning a lesson. That's where you're going to get your most. Your victories don't teach you anything, your failures do, and you will fail. Don't consider failure an identity, just consider it an occurrence.
Don't consider it an occurrence, you're saying?
Yeah, it's just an event. It's not an identity. You are not a failure. You just experienced a failure and you learned lessons, move on.
Do you still have any failures today that happen?
Daily, man. I'm serious. We've always got stuff going wrong because we're still learning. We as a company are learning. I'm still learning. It happens all the time. Sometimes they're little ones, sometimes they're big ones, but constantly. Yeah. Absolutely.
Does anything keep you up at night? Tom Burns at night. Is there anything that worries you, or not? You don't have a worry. You have a really chilled out personality. It seems like you're. I don't know if it's meditation or what it is.
It's all that hiking. No, I sleep like a rock, and it's probably not fair. I don't watch CNN. I don't watch Fox. Both of them are, they're jaded. I don't watch the news. I keep up with it. Connecting with people, just, that keeps me going. I'm not as big a fan of doing Zoom stuff. Zoom things, I wish I could get back and shake hands again, but that's the beauty of being a doctor. So yeah, it's probably not fair. I'm not telling you my life's perfect, but nothing keeps me up, man.
I think that's a goal that everyone would like to achieve, to the point that you don't have to be stressed and you can wake up. So it's a great thing to have, and I think that's a attainable, aspirational goal.
Yeah, there's always going to be stuff, stuff can be going on with a family member, an illness or something like that. Now that always bothers me, but I always figure there's a solution for everything. So I want to get to the point where I feel I've done everything I can do for the day, and it's time for my body to relax, and I'm usually out like a light.
Yeah. And speaking of day, what does Tom Burns' daily success routine look like? What time do you wake up? What do you do in that?
I'm up at 5:15, and I get a little coffee, a little breakfast. I sit quietly, listen to a little something. It might be a podcast, it might be a little meditation music, which I told you I'm not very good at. I write in a journal. I've been doing that for several years, which I picked up from learning from somebody else. And it's just nice to put your things on paper. And so lately I've been writing down my goals in my journal. And then I'll read something. What did I read this morning? 12 Months to a Million, written by a friend of mine, Ryan Moran. He teaches people how to create businesses on Amazon. But the whole first part of his book's about mindset. I love to read mindset. So I read that. Then I'm off to the gym. I do about an hour and a half workout. Then I grab a kale and spinach smoothie, and I go to work and see patients. And then by noon, I'm off to the real estate office, or doing podcasts or other interviews or something like that. Then I come home. I check emails. I'm always checking them on my phone each day, and I might write a blog, or for the last 2.5 years, I was writing the book, right? So now I might write a blog or an email, learning a little bit about WordPress, which I don't want to know too much. So I'm learning how to run a website now. Yeah. And so about 8:00, 8:30, my brain shuts down, and that's when I watch mindless TV with my wife, and then I go to bed and start it the next day.
Yeah. Wow. So if I noticed correctly, you're very structured in your routine.
Boy, it sounded structured. Yeah. Now those days may change,
Yeah.
Today I did get up and do the morning routine, played golf. That was tough. I had a couple of calls with people, and doing this, and I'm shutting it down after this, to be honest with you. I'm gonna go enjoy the Thanksgiving holiday.
Yeah.
I traveled. Huge hot button for Tom Burns. That's probably part of the why. That's why that core value had adventure in it. So my life is interrupted a lot with travel. I just got back from Turkey. Yep. But yeah, that morning structure is important. I don't get it every morning. Mm-hmm. And I probably hike down by the lake. I've got a lake by me. I hike down by the lake probably 4 times a week, and that's where I really chill out.
Nice. Yeah, I was going to ask, how much of that time do you allocate in your day to your wife, to friends, to just stuff outside of business?
Yeah, much as I can. I actually wrote down recently on this new goals project to connect with certain people. I mean, I've written it in my calendar, and my wife and I are now kind of scheduling, making sure that we go out and just kind of do a date night. So I haven't scheduled that as much as I should. I keep up, but I think I could do better.
Right? So if she's listening, she's going to remind you.
Yeah, exactly. She's like, I don't want to hang out with you. I want to hang out with my girlfriends. But yeah, I like to stay in touch. So often not structured, but on a whim, I'll just call an old friend from high school and say, hey, what's up? So yeah. It's great connecting up.
Yeah. That's great. And do you have, you have friends from high school, obviously, and I see this happening. Do friends call you? They see how you're doing success-wise. Do you have those calls sometimes, those heart-wrenching calls where it's like, hey, they ask for money or things like that?
No, I haven't had it. Some family members might have done that, but no, most of the time half the time they call me for free doctor advice, which is okay. That's fun. And sometimes they just call up and say, hey, I saw you on something. I didn't know you were doing that. Gee, I thought you were a doctor. Catch up. It's awesome. Hey, we find out some of these people maybe I haven't talked to for 10, 20, 30 years. So yeah, it's fun.
Wow. Yeah. Wow. I mean, the phone has changed the world. It's changed the game, right?
That thing changed my life. As soon as you could start doing, emails and stuff like that, it changed life for me.
Yeah, absolutely. Well, One thing I ask every guest in the conclusion, the podcast is called The More We Know. And you said something actually earlier. You said the more you actually learn, the more you'll actually earn in real estate. And that's the slogan. The more we know, the more we learn, the more we earn. That's what it's about. So I ask every single guest at the end, what's something you wish you knew more about? It could be
Oh,
anything.
wow. Uh, the Southeast Asia, I've never been to Cambodia and Vietnam. I'd like to know about that, a big travel bug, that's probably all deals with travel. What people are like in India and in Southeast Asia, that's an area of the world I haven't hit yet. So how they live and what their lives are like.
So that's on the list.
Yeah, absolutely. Absolutely.
Well, you gotta fill us in when you go there. That'd be an interesting trip.
Yeah, it's like I'm kind of starting to throw some stuff from my travels onto my blog. So I feel it'll be sort of half travel and a little bit of real estate.
Yeah, get a nice mix.
Yeah, you bet.
You mentioned the blog. Where is this blog?
So it's richdoctor.com is
Rich
my
Doctor.
website. And
Sorry, Rich Doctor or richdoctors.com? Okay.
richdoctor.com.
Okay.
And yeah, just started putting those out. And sometimes there's some I kind of bounce back and forth between personal development and real estate tips, and I do videos from wherever I am. So I got a couple of videos from Turkey that I'm going to put out here shortly. They're rough, but they're fun. So that's that industry. I'm just kind of starting that. So I've got that. And so that's kind of fun.
Nice. Yeah, because my next question is going to be, where can the audience listen to this? They're interested in learning more about you. Where can they connect with you on social media, reach out, buy your book? Can you just share any type of, what you share for social media and where to get the book?
You betcha. So again, richdoctor.com is where is the website, or you can email me, tom@richdoctor.com. Both of those, through those, that can take you to my real estate company. We're not looking for investors, but Darren and I founded the real estate company on education as well. So we put out blogs on there too. It's a little more high level stuff. Sometimes it's about debt, private equity, cap rates, things like that. Mine's going to be a little more basic over time. I'm on Facebook as Tom Burns. Rich Doctor is going to have a Facebook group pretty soon, but we're waiting on that. So you're kind of catching me at the early part. And I'm on LinkedIn as well. So, but send me an email to tom@richdoctor.com. I'll answer questions and, I'll connect up with you.
Yeah, well, that's an gracious offering from you. So I appreciate you telling that to the audience. And, I hope people go and read your book, because it's a phenomenal book. And, I've learned so much in this call, and I know people, when they listen to this, will learn so much. So we appreciate it, Tom.
I hope so. And I appreciate what you're doing for them and for everybody else. So it's always a learning experience for me to be on. So I really appreciate it.
Yeah. Well, thank you so much for those kind words. And, I'm going to go back and listen to this myself too, because I appreciate, when someone like you talks, we listen.
I appreciate it. Thanks, man.
Well, thank you, Tom. Let us know when that real estate course is coming, because we're going to be on it.
You got it. You'll get the first email.
Okay, perfect. I want to be, hey, just like you were Robert Kiyoski's first book, I want to be the first course.
There we go. You got it. Thanks, Mir.
Okay, Tom. Thanks so much. Take care.